There we go. We're all live.
For today's webinar of telework and taxes, what you need to know. My name is Julie Quinn from Transaction Associates, and joining me today to facilitate today's webinar are Kelly Marsacci and Sophia Gallimore, as well as our presenters, James Kozik, and a certified public accountant, and Dana Ackerman, tax advocate for the Massachusetts Department of Revenue. This webinar is brought to you by Transaction Associates, manager of your workplace or residential building commuter services program. We are a full services transportation company managing TMAs, assisting clients with commuting options, benefits, and as always, promoting green commutes. With so many of us working from home and tax session in full swing, we are pleased to bring you this webinar about how teleworking may impact your personal taxes. This webinar will be recorded, and after the presentations, there will be time for questions and answers. Please use the Q&A feature to submit any questions, and we'll do our best to answer all of them. And with that, I will turn it over to our first speaker, James Kozik. Thanks, James.
Hi, everyone. I think I'm sharing the appropriate screen.
Yep, you look good.
All right. So telework and taxes. So 1 second, I'm gonna hide all that. Thank you very much, and welcome to the nationwide review of what's going on with telecommuting and the current tax situation. As said before, my name is James Kozik. I'm sure that everyone here has been impacted with COVID-19, at least in some fashion. With such a change in the workforce and how people really commute to work, I think it's important to see what has been going on behind the scenes with taxes and how the stages changed in the tax world due to the COVID pandemic. Real quick, just a little bit of a disclosure. This presentation is meant to provide general information only and intended to provide for your use. This presentation should not be construed or rendered of advice regarding specific situations. If you need a specific tax advice about a personal situation, please consult with a tax professional. And a little bit about me. I graduated with my bachelor's and my master's of accountancy, both from Rider University. I attained my CPA in 2015 with all the tests and everything like that. And I actually opened a small side practice in 2016, preparing both business and personal tax returns for clients. This small side practice eventually led me to joining where I am now at New Century Tax and Accounting as a partner right at the beginning of this year. All right, so we're going to start off the webinar with a polling question.
So in 2020, I'm sorry, I think I have the wrong poll up. Give me 1 second.
No problem.
All right, there we go. So what kind of tax form did you receive? A W-2, a 1099, or I don't know? So we'll leave this open for about 30 seconds or so. We'll get everybody to get their answers in. Help James sort of speak to what everybody's situations are in a more broad
Yep.
Okay. Looks like we almost got all the votes. So if you haven't voted yet, go ahead and get that into the poll. Okay. I'm going to end that. So it looks like 91% have a W-2, but we do have a couple people that have a 1099.
There we go. So yeah, as probably expected, most people do just, most people are just regular employees at their company. So with that, let's see if I can get my slides to go. There we go. One of the biggest questions that I've received this tax season so far about working from home is if my clients can claim the home office expense deduction. Now, this goes along with unreimbursed expenses, which are any expenses that you're not reimbursed for by whatever means by your employer. In the case of a traditional employee, expenses incurred by the employee, the employer determines the benefits. So there's a few things that an employer can do. An employer can either pay for any expenses incurred directly. They can use benefit programs where employers help pay for the costs. There's you can have employees submit expense reports, and then the employer can reimburse the employee at a later date. Or just you don't, or the employer cannot or doesn't have to reimburse the employee at all, and just the employee incurs the cost. This final category is really where these home office deductions are focused. And obviously everyone's asking about it because of they're working from home, using their regular offices in their houses. But some other examples of these costs are portions of your utility bills, internet bills, office supplies that you purchase for work, electronics, furniture, telephone, travel, computers, software purchases, and obviously so many more. Before 2017, there was a section in the itemized deductions under Schedule A on your federal tax return called unreimbursed employee expenses over the 2% floor. So basically what this meant was any expenses that were over a certain level of your income, you were able to deduct on your taxes as part of the itemized Schedule A. However, and I hate to be the bearer of bad news, but with the Tax Cuts and Jobs Act of 2017, these deductions were eliminated to make way for a more simplified standard deduction. So what that basically means is that for regular employees, there is no deduction for any of the home office expenses that you incurred. These provisions in the tax code, though, are set to expire in 2026. And so it's possible that they'll come back. But even before that, there weren't a lot of people getting past the 2% floor anyways with their expenses because one, most employers provide at least an expense reimbursement plan. So a lot of these smaller costs would already be captured. And otherwise it was just, small supply purchases here and there. You're not going to get above the 2% floor. So far, the other program that we didn't talk about is the benefit programs. There's a lot of programs that employees can sign up for that are part of their benefit packages at work. There are some obvious ones, such as healthcare or retirement plans, but some employers also provide more detailed plans where you can contribute pre-tax or before tax dollars and reduce their wages for the year. Some of these can include group legal plans, cell phone plans, and qualified transportation benefit programs to help share for the cost of commuting into work. Now, if you're not a former employee, so the two people who said that they received 1099s, you're treated as a separate business entity entirely from the organization. Therefore, any expenses that you incur due to employment, you actually can deduct on your taxes. If you are in this situation, though, I would definitely recommend consulting with a tax professional on the complexities of filing as a business. Now, I've also seen a situation where an independent contractor works for an employer and the employer still reimburses through an expense report system their costs. So the way that this would work on your taxes, if you are a 1099, you would include it in your total income for the year, and then you can deduct the actual cost, but make sure you keep your receipts. The biggest thing for that is keeping your receipts and making sure that you track all of your costs. Now, I'm sure a lot of people on the employee side are asking, wait, why can't I be an independent contractor? Why am I an employee? The IRS and DOL have made a lot of guidelines on what an employee is and what an independent contractor is. There are certain tests that are applied against each individual when being hired. And basically, it's determined if that employer has general control over the person. Some odd points are then making their hours, general workflow, setting deadlines. If they're able to do that, they would be qualified as an employee. If you don't meet the qualifications, then you would be considered an independent contractor. So it's not necessarily better to be defined as an employee or an independent contractor. One big difference is that as an independent contractor, you can't participate in a lot of the benefit programs that employers offer. So with both sides, as with most classifications, they each have their benefits and their faults. It's more important to understand what category you fit into and how to make the best of your situation. With that fully reviewed, let's move on to our next polling question.
So in 2020, how much / where did you work? Were you full-time work from home? Were you full-time office? Were you a hybrid where you were 50% more work from home? Or were you a hybrid where you were 50% more in the office? Or were you part-time? Were you less than 32 hours a week? So again, we'll leave this open for about 30 seconds or so. Let everybody get their votes in. Looks like we're about almost 70% votes. Leave it open for a couple more seconds. Looks like people are still putting in their answers. Okay, go ahead and close that out. So it looks like about half of you guys are full-time work from home in 2020. We do have a good majority that were 50% more work from home. We do have some that were full-time office in 2020 and some that were 50% more in the office. But everybody looks like they were full-time.
Sounds good. All right. So, went too far. Reason that we asked that question is that the population moving generally over to telecommuting, not as a matter of convenience, has hit the states especially hard and made them scramble to create new rules and regulations in order to accommodate what's going on in people's lives. These rules are implemented only if something in your employment or residential status has changed. So, for example, even if you telecommuted rather than going to an office before, then you really didn't change your situation, and really nothing's going to change with your status. Same thing if you work in the same state, even if they moved you to telecommuter status. If you're working within the same state, generally your situation hasn't changed and your tax return will likely be the same as last year. However, there are situations where people have changed their employment status. I've heard of situations where companies had to change employees over from full-time to part-time in order to save money. I've heard people get laid off and then brought back as independent contractors on more of a situational basis. But the key thing there is that employers must give direction to their employees and hopefully can help you in the transition, especially if that impacts your benefit plans, such as health plans. It also is important to consult a tax expert, especially in the situation where you move to a consultant status, considering that's a very large change from filing your taxes year over year. The other thing that's happened with a lot of people is that their state of employment either temporarily or permanently has changed. Some situations temporarily is that commuters who are crossing state lines, traditionally now we're just told to work from home. There's also been a lot of employees who use the opportunity to move to completely new states and work from home permanently. I actually have a client who took the opportunity. His employer let him. He's going to move out to Chicago. He was working out in New Jersey. And he's just gonna full up move to Chicago and work from home just full time now. Obviously that changes your tax situation, and it can put people into a lot of different situations, especially since each state has its own unique laws. So definitely be prepared for a different kind of tax return. As an extreme example also, an employee who moves from New Jersey to Texas in the middle of the year would only have to file for New Jersey part of the year, since Texas doesn't have an actual state income tax. This brings us to our next polling question.
Yep. Go ahead. In 2020, did you commute across state lines? Yes, I live out of state, or no, I work and I live in the same state? go ahead and leave this open for about 30 seconds again. You know, we've had a lot of questions about, well, I live in New Hampshire, but I work in Massachusetts. So get a general sense on that. So
Yeah, and we're definitely addressing that. Don't worry.
So looks like everybody pretty much has their votes in. So I'm going to go ahead and close this poll. We're pretty even. About 64% do work and live in the same state, so that makes it a little bit simpler. But we do have a good portion that live out of state.
We do have a good portion that live out of state. So yes, especially with New Hampshire, I know that changes situations. This has and will become an issue in the near future, as some states are trying to proactively address the situation. As an employer, the employer must identify what states their employees really work in. This was easy to identify when everyone was going to a physical office. It's wherever the office was. However, with these work from home provisions that are not a matter of convenience to the employee, which state does the employee really technically work in? To determine this, I think I jumped the slide. Sorry about that. To determine this, every employer has to determine the economic nexus of the work being done. And nexus is really just a fancy word for a requirement to collect taxes. In general, if there's a physical presence in the state, that automatically creates nexus. However, in a situation where all employees are telecommuting temporarily and they live outside of the state, does that create nexus due to a physical presence? The unique nature of the pandemic has really prompted some states to act and make some rules and regulations that pertain to COVID-19 specifically. For an example, some states have already stated in their laws that shelter-in-place restrictions will not create nexus for the employers. Other states have stated that employers will have to change their nexus based on where the employees are telecommuting from. And then some states haven't even formally addressed the issue. Obviously, it kind of depends, and each place is going to fall wherever they think that they're going to get the most tax revenue. So that's something to keep an eye on to see what state you possibly work in and how that might affect your situation. This is an evolving issue every minute, and it'll only continue to cause more changes in the near future. It may be important to keep up to date with your state laws and frequently reach out to your tax professional and employer to keep you in the loop about updates, especially concerning if certain states disagree on treatments, which is currently going on right now with New Hampshire and Massachusetts. On October 22nd, New Hampshire officially filed suit against Massachusetts for its taxation against telecommuters in the Supreme Court, saying that New Hampshire residents are now working from home. They shouldn't have to pay Massachusetts state taxes when they're really working from New Hampshire, which actually has no state income tax on earned income. They filed a case with the Supreme Court, but no decision has been made about hearing the case. As of December 23rd, 14 states and 18 organizations have petitioned the Supreme Court to take the case. And I read it as of January 25th. There has been an official motion for the federal Supreme Court to make some kind of judgment or action on the case. So this is going to be a very evolving situation and could impact a lot of different people. So definitely stay tuned to what's going on there. If the Supreme Court decides to hear the case between New Hampshire and Massachusetts, it will likely create a domino effect of states filing suits against other states. And this could create long-standing litigation issues and massive changes in some of the largest cities in the United States. One example of somewhere where I think that would be hit extremely hard is actually New York City, which basically thrives off the employment taxes of millions of transient workers. Since New York City has both a local New York City tax and a New York State tax, if, say, New Jersey, Connecticut, all of them basically didn't pay taxes to them, or these employees didn't pay tax to them anymore, the amount of tax revenue loss would be huge, and it would have to probably lead to very major changes within the city. Companies and employees alike need to be prepared for what changes may come next. So listening to the news about these cases, I think, becomes critical for future tax planning and more layers than just the surface. And this will lead us to our next polling question.
Yep, So now that we've kind of covered what's going on if you live and work in different states, what is your unemployment benefit status for 2020? How does this affect your taxes? So yes, I received unemployment benefits in 2020. No, I did not. I did not, but my spouse did, or both my spouse and we both did. So again, we'll leave this open for about 30 seconds and we'll talk a little bit about how unemployment benefits may impact your 2020 taxes. Okay. Looks like everybody's pretty much voted. So if you haven't gotten your votes in yet, go ahead and do that now. Okay. So it looks like 68% of people did not receive unemployment benefits, but about 18% did. And then 9% did not, but their spouse did. And then we have a 5% where both their spouse and they both did.
Yep. So a little bit of a mixed bag. So that the main reason that we ask this question is the same with withholding, is that eventually could cause some issues with unemployment with all these different states back and forth. So general question, if you work in Massachusetts but live in Rhode Island and you were terminated from your job, who would you really reach out to? The correct answer would actually be Massachusetts, since unemployment is based on the state of employment, not the state of residence. Along with withholding, if the states disagree, it could cause a shift in how unemployment is handled. Some of the issues that come up are that each state has different filing methods, so employees would have to know the correct method in order to properly receive benefits. Some states also withhold unemployment taxes to help pay for the funds. So as an employer, you have to know where your employee really is trying to claim the money. And for part-year filers, making sure an employer and employee that you're accurately reporting state of residence becomes key to getting the full benefits, because if you'd have to claim half from one state, half from another state possibly. So that's a couple of the issues. Nothing's really changed there so far, but obviously definitely keep monitoring the situation. So next steps. The biggest thing that you need to do is talk to your employers and to talk to your tax professionals. Since everything isn't set in stone yet, it's important to keep up to date with all the possible changes coming that we discussed in this presentation. Both of the above should be aware of the situations as well and would be the best in help guiding you make the best decisions for your situation. Some of the other issues that are also impacted due to this year are the stimulus checks. These will need to be reported on your taxes in 2020. And if you didn't receive the full stimulus checks the first time around, you may receive the remainder as a credit on your 2020 tax return, actually. Also, as probably you already know, the e-filing date started at the beginning of tax season actually really was pushed back from January 31st to February 12th. Is this a sign to come that the due date will be extended again like last year? The IRS has made no indication of it yet, or they've said, no, we're not going to, but you definitely want to keep in the loop and keep reading the news and seeing if that's going to happen. And if you happen to need a tax professional, feel free to reach out to me and my firm. We're down in Cranberry, New Jersey, but like the rest of the world during this pandemic, we are fully digital and would love to help you with any of your needs. We do tax preparation for both individuals, businesses. I have a couple C Corps, a couple S Corps. I've done trusts, I've done estates, all this type of stuff. We also do accounting advisory and bookkeeping if you need that as well. Think of us as your one-stop shop for your accounting needs. Or if you just have any general questions or a quick question, hopefully we address a lot of those at the end of this presentation, but you can always contact me at any time. Thank you very much for listening to me and my presentation. And up next, we have Dana from the state of Massachusetts as the tax advocate to discuss more of what's happening at the specific state level.
Perfect. James, thank you so much. That was great and so informative. I just want to remind you guys, I do see a few questions coming in that after Dana's presentation, we will go ahead and answer your questions. So now I'm going to turn it over to Dana Ackerman, who will provide the Massachusetts perspective to tell you about her role at the DOR in Massachusetts. Go ahead, Dana. Thank you.
All righty, let's see what we can do. All right, hopefully that's up.
Yep, looks great.
All right, awesome. I'm Dana Ackerman. I'm the taxpayer advocate at the Massachusetts Department of Revenue. So I'm going to talk a little bit about some of the state implications of the same topics that that James talked about. Let me see. Okay, I've been with DOR for a really long time, for over 35 years, and I've been the taxpayer advocate since 2015. In my time at DOR, I've always been on the customer service side of the department. I've worked in customer service I started on the phones in customer service. I've done a lot of training. I've done a lot of outreach programs like this. I've worked in the communications area. So always on the friendly side of DOR, I like to say. I also, in my position as advocate, I oversee the problem resolution office, which is sort of a specialized customer service area that taxpayers and tax professionals can reach out to if things have kind of gotten out of control with the department. If you're trying to work through a problem and it doesn't seem to be getting resolved through normal channels, the problem resolution office can maybe assist with that and try to get everyone through what is usually just a communications issue. At least that's what we hope. The advocate generally, if that's a title or a position that you're not familiar with, my main focus is to kind of represent the taxpayer at the Department of Revenue. Try to think about the taxpayer's needs and the impact to the taxpayer, whether it's an individual or a business taxpayer, for anything that the department is doing. So I am trying to put myself in your shoes on a daily basis. I think, oops, I went too far. There we go. When I think about Massachusetts taxes and federal taxes, I think state taxes are often an afterthought. Everyone talks about federal tax changes, and more than likely your federal tax refund is a lot bigger than your state tax refund if you're getting a refund. So the state doesn't always get a lot of attention. Some of the issues we've talked about today, the state part is really important. But this slide I have up right now relative to business expenses, this is an area where Massachusetts law follows the federal law, which makes it easy for everyone, for you, for the department as far as tax administration, for your tax professionals, if you're getting help preparing your taxes. I think we all like it in some ways when the state law follows the federal law, because that just simplifies matters. So James went into a fair amount of detail on this topic about expenses and who can take what expenses, and I'm not going to repeat everything. I just want to draw your attention to the fact that for Massachusetts, we are following federal rules. So if you're a W-2 employee, generally you're not going to be able to claim working from home expenses given the current federal law, which Massachusetts recognizes. On the other hand, if you're a self-employed person, an independent contractor, there are a lot of expenses that you may be able to claim, and Massachusetts again will recognize essentially the same expenses that you would be claiming on your federal tax return. I do want to mention specifically, just because it's something that people miss sometimes if they're new to being self-employed, and I think with this current climate, a lot of people are starting new businesses. So I know not very many of you indicated you were getting a 1099, but I'm going to assume that maybe some of you are new to that category, and I want to draw your attention to a couple of things. On the Massachusetts return, there's a deduction for the self-employment tax you pay, which lines up is parallel to the deduction for Social Security tax if you're a W-2 employee. So that's important to make sure you don't miss it. I also like to always remind people that income tax is what we call a pay-as-you-go system. And when you're a W-2 employee, you don't think about that a lot. You have taxes withheld. Your employer takes care of that, withholds the tax for you. You take a credit on your tax return at the end of the year. But if you're self-employed, you still have that same obligation to pay as the income is earned. And you would do that through making quarterly estimated tax payments. So that might be something that's new if you're new to being self-employed. And this last bullet is a very I think of this as a very taxpayer advocate message. I can't stress enough how important it is to keep records if you're self-employed. If people have issues with the tax department, and I think it's fair to say that that's any tax department, it often comes down to record keeping. If your tax return's questioned for anything, you want to make sure you have the records to back up whatever it was you were claiming for expenses or whatever else. So make sure you keep your records as you go. You don't want to be trying to recreate records at the end of the year, or even worse, years later if you happen to be chosen for audit. And I'm not saying that happens to everyone, because it certainly doesn't, but you want to prepare as if it could happen. Because that, like I say, in my office, the people I talk to every day that are having issues with the Department of Revenue, 99% of the time it comes down to not having good records to support what they did. In terms of the pandemic and telework, James talked a lot about the issue of commuting across state lines, and that may or may not impact your taxes for 2020. Massachusetts has put out some guidance that basically says we're looking at this as a temporary situation. And if you worked full-time in Massachusetts before, even if you're working from home now in another state, we're still going to consider that Massachusetts income. Or if it was part-time in Massachusetts before, we're going to hold that same percentage. So if you worked, 3 days a week in the office in Boston and 2 days a week at home, even if that percentage has changed, we're going to look to your previous tax return, basically, to say what percentage of your income should be reported to Massachusetts. And a lot of the reason for this is because we believe it's temporary, and for the simplicity of the employer. So the employers are not having to try to track a lot of changes as people might move from state to state, or even just move where they work from a location in Boston to a location in another state. So we've issued some guidance to that effect. I've got a slide at the end that lists the specific documents that you can find on our website to look at. And the rules are in effect until 90 days after the mass state of emergency ends. So it's ongoing. It doesn't have a hard end date at this point. So that certainly can be a little bit tough. James mentioned the lawsuit between New Hampshire and Massachusetts. Definitely something to watch. We don't know if the Supreme Court's going to take the case. Even if they do, the decision won't happen anywhere near in time for this filing season. So, we expect people to follow the guidance we've issued. If there's a court decision later, then everyone has to reconsider their situation based on what that decision may be. These are the resources that you can find on our website, and our website is mass.gov/DOR. We issued a technical release early on in the pandemic that, in my view, is a little more directed to employers and their issues with Nexus and with taxes withheld for their employees. Excuse me. And we issued a regulation that is really focused on the employee side of it, and what is Massachusetts income if you're telecommuting from another state strictly because of the pandemic. And that's important. This is your telecommuting or your work situation changed as a result of the pandemic. And we just recently issued a working draft directive. We usually put out our guidance as a draft so people can comment. And sometimes we get a lot of comments and sometimes we don't. And a lot of the comments or most of the comments are typically from tax professionals, but honestly, everyone can comment. There's, if you were to find that directive on our website, there would be a link where you could comment on it or ask additional questions. It's really helpful, honestly, for us when people comment, because then we can maybe add to it or clarify certain positions or add examples, whatever the case might be. So this directive, I think, is really helpful for individuals that might be working across state lines or previously worked across state lines, because it gives some examples. It brings it down to really some common situations. is it going to cover every situation or your situation? Maybe not, but we certainly try to address most of the common ones. And I think that's something that the technical release and the regulation really didn't do. And that's the kind of information that's most helpful to individuals. Because things are still developing, this kind of information isn't in our tax form instructions this year, although, that's probably the place we would most like to have it. But the timing wasn't with us for that. So this directive really is helpful to look at, kind of in addition to the normal tax form directions. So the website, as I say, mass.gov/DOR, and I've given you our contact center phone number. So if you have specific questions about your own situation, you can reach out to the Department of Revenue at 617-887-6367. I do want to mention one other thing that I didn't have built into my slides. James talked a little bit about unemployment, and most of you did not receive unemployment, but there was a mixed result for that poll. The Department of Revenue did put out some guidance about taxability of unemployment. I hope people know that it is taxable whether or not there was tax withheld on it. So that could result in some balances due for people that they might not expect. But that is the rule in Massachusetts. Honestly, it's another area where we're following the federal standards where unemployment is all taxable, and that's even including the special pandemic unemployment that came out that might have been issued this year. But the other side of it, if you didn't receive unemployment, there was a lot of unemployment fraud. I'm sure you may have seen things in the news about that, and it is possible that you received a 1099-G from the unemployment office saying that you received unemployment that you did not. And that's important to address also. You want to file a fraud claim with the unemployment division in Massachusetts if you received that notice incorrectly. So if you received a 1099-G and you did receive unemployment, it is taxable. If you received one and you shouldn't have, you want to follow up by filing a fraud claim, but you should not report income you didn't receive on your tax return. There's definitely been a lot of questions brought to DOR about both sides of that situation. So I wanted to take a chance to mention it to you. And that is all I have for my slides. So I think we're going to open it up to questions.
Yes, we are. Thank you, Dana. Even more great, useful information. I'm sure everyone found that helpful. So I think with that, I will turn it over to Sophia. We do have some questions, I see. Some people.
We do. Yes, we do. So I'll go ahead.
All you.
Okay, thanks, Julie. So the first question is, does someone in a solo business, and this particular person is a therapist, not working for anyone else, qualify in the 1099 category? And specifically what they're just talking about is, like, if I bought myself a new computer for work, can I deduct the full amount since no one reimbursed me for it?
Correct. Yes. So in that situation, if you're just working for yourself, it's possible that the person that you worked with, or like normally you would receive a 1099 if you provided services that are over $600. Sometimes your client doesn't send it to you. It happens. So you would have to report that income separately, but you would be able to deduct the computer. I would just double check and take a look. I don't want to get into too much specifics. You could claim that as a fixed asset. There's a couple different rules there, but you can deduct it, yes.
Okay, thank you. So do you file as both an independent contractor and an employee if you receive both the 1099 miscellaneous and a W-2?
Yes, you do. So 1099 miscellaneous though. So this year they actually created a new form for the non-employee compensation. It's called 1099 NEC. But if you received a 1099 miscellaneous, it's not necessarily considered self-employment income. So for example, you worked over at a church one Saturday and one Sunday to help them out with like a, some type of event that was going on. And they paid you $500 or let's go $1,000. They paid you $1,000 to help out. That would be a wonderful pay rate. But so that situation, that wouldn't qualify as self-employment. That was more just like a other income kind of situation where you wouldn't file it as a separate business. You would just file it on your taxes as other income, and then you wouldn't have to pay Social Security and Medicare on it, which is kind of the key. It's balancing with those. You can't deduct anything against it, but you also don't have to pay the Social Security and Medicare tax on top of it. So you really kind of want to look at the situation and see what that income was really for, is what it is.
Okay, thank you. If you are working a few days from home, telemedicine, and a few days at work in clinic, can I deduct a space in my home as my office?
If you're a W-2 employee, no. Unfortunately not. If you were 1099, then it would follow the rules of being a separate business and you would be able to. But I'm assuming probably a W-2 employee. So no, unfortunately, with the rules the way they are right now, no.
Okay. How does the supplemental federal unemployment benefit impact taxes again? I think you covered it, but if you can just go over that.
Dana covered that as well. I don't know if you want to take this one, Dana?
Sure. Yeah, on all types of unemployment, and there are a couple of special categories for this year, but they are all taxable. So they do all need to be reported. For Massachusetts, at least, you would normally have had the option to have state tax withheld. So if you didn't, there's the possibility that when you file your taxes and you report the income, you may end up with a balance due. That is certainly a situation we expect to see more of this year. And again, speaking for Massachusetts only, we can certainly set up payment plans for people and work things out if it ends up being a balance that can't be paid immediately.
Right. Actually, to add to that, I know actually from New Jersey, for example, does not tax unemployment. So that's a situation where the state could be totally different. So I definitely look into the specific state that you're talking about. And just to add to that, I've already had a few clients who have gotten whacked by the unemployment not being withheld. I mean, I had people, like I said, puts them into a whole new tax bracket and none of it's withheld and people are getting whacked by it. So just be cognizant of that when you're doing your taxes.
It can be an unhappy surprise, and it's better, in my view, it's better to figure that out sooner rather than later so you can start to plan one way or another.
Exactly.
Okay, great. Thank you. So while working from home, I took the opportunity to move from Massachusetts to New Mexico. So I'm about 2,000 miles away. It's pretty obvious that I'm not coming back into the office when the emergency is over. Is Massachusetts still considering me a Massachusetts worker due to the emergency?
We are. If your situation was that you were working in the office in Massachusetts previously and you're still working for that same company, until this state of emergency is over, we're considering that still to be Massachusetts income.
Okay, but once that emergency is over,
once the state of emergency is over, I don't want to go too far down the road about what exactly the rules will be, but I expect we'll go back to the rules we had on the books previously, it would matter where you're doing the work.
Right. Okay. I got another one. Will the supplement show up on the MADUA 1099?
Any unemployment, yes, should be on the DUA 1099G. Any type of unemployment.
So we also had one from prior to the
I-
webinar that started, Sophia. So if I received a 1099-G that I didn't get unemployment benefits, who do I actually send like that fraud claim to? Is that on the MassGov website?
There's a fraud, you can do it online. It's part of the DUA website,
Okay.
that you'd be able to do a fraud claim online and tell them that you didn't receive it.
Okay, I got another one here. Did I hear right that the economic impact payment, the stimulus checks, need to be reported on the tax return? That seems to contradict what I found on irs.gov. Also, is that the same for federal and mass state returns?
So it will be on the federal return. And the reason being for it being on the federal return is if you actually apply, if you actually, what's it called? If you actually were supposed to get more. So for an example where they use 2019 income, they use 2019 information to figure out to send you the economic impact payment. So you made this much, you made, 160, so you didn't qualify at all for the economic impact payment in 19. However, this year you go on unemployment and you don't make nearly as much, you make only 70. That situation is where you want to report because you would have received none, but you actually qualified for the full amount of the stimulus. So you would get the stimulus as a credit on your tax return and it would increase your return. It does not, it's only on the federal level though. So the states, or at least from the states that I've seen, none of them ask about it. It's because it's really just a federal level program. So the states don't ask about it, but you definitely want to report it. And they ask for it on the tax return as a new form. It's called the recovery rebate credit form. So that is the situation where they help. Now, say you received more than what you should have qualified for. They're not asking for the money back. So if you got 1,200, but you really only qualify for 700, then they're not going to ask for the money back. So it's really only a win-win situation.
Yeah, I want to confirm it has no impact on the Massachusetts return, and I'm going to try not to put words in James's mouth here, and maybe this is what you read on the IRS website. It's not considered taxable, but it is still something you need to show on your federal tax return to kind of recalculate, make sure you got as much as you should have, so you can get more if you're entitled to it. But it's not reported as taxable on either the state or the federal returns.
So if I would think about that, it's more of a system check that you got what you were owed.
Correct.
Okay.
I think that's a fair summary.
Yep.
Way of thinking about it as a not tax person.
So then if that's, okay, so what if you didn't receive the stimulus check and you do that form that you were saying, James, that you can get the credit?
Yep. Correct. You would get an, so if you didn't receive either economic impact payment and you come to it and you qualify, you would get an $1,800 credit on your taxes. So it would actually add, and it's a refundable credit. So it would add to whatever refund you already have or take away from the amount that you owe.
Okay,
So.
that's great. Okay. Thank you. I don't see any more questions. Kelly, did we get any more?
Well, I believe that's
email?
everybody. Yeah.
I didn't see any either.
I do have one more point to make that I know that I didn't actually say in my presentation. The qualified transportation benefits. So I know a lot of people obviously probably, if you had them, if you canceled them, I would just be careful because they'll add those back to your taxable wages and they might not necessarily withhold on them. So that might be another situation because I mean, people were taking out $250 a month against these qualified programs, but now that's all going to be added back to your taxes. So just another thing to be cognizant about.
Great.
So definitely
Good.
check your withholdings with your
Yes.
employer.
Absolutely, absolutely. That's great. Okay, I hope this helped everyone as much as it helped me for my taxes. So thank you so much to James and Dana. You guys were fabulous. And thank you everyone for your great questions and for joining us. If you do have any additional questions or comments, you can reply to our follow-up email and your commuter services representative will get in touch with you. So with that, thank you presenters and thank you for joining us and have a great afternoon.
Thank you.
Thank you.